Hi there. I just wanted to share with you a chart on the balance of payments showing trade balances in goods and services between the UK and other European Union countries. So as I speak, in May of 2016 there were 28 European Union countries. Of course, the UK has an EU Brexit remain or out referendum in June of 2016. We wait to see the result of that. But this is quite interesting data showing the trade balance, annual trade balance in goods and services between the UK and a selection of EU countries. They've chosen France and Germany, Ireland, Netherlands and Spain. They're the biggest EU nations, are the ones we do most trade with. And then in orange, it's our trade balance with the rest of the European Union. So within the orange section, we might run some trade surpluses, but overall, actually, we're running a big trade deficit with those countries as a bloc. Now, notice here that Britain runs a sizable trade deficit with the EU. We run a large trade surplus with Ireland, and we pretty much do that every year. But the gap in trade with Germany is getting wider. We're importing far more than we're exporting with Germany. And that gap with Spain is also getting quite big in recent times. Overall, in 2014, Britain ran a trade deficit in goods and services with the European Union of over £70 billion. Well, of course, the total value of trade within the European Union has been increasing year on year. So why is Britain running such a big trade deficit? I think lots of reasons. Some of them are short-term and some of them are medium-term or long-term factors. A long-term consideration is the fact that Germany is a highly successful manufacturing export country. Think of companies like Bosch and Adidas and Volkswagen, Alliance Chemicals. They've got some globally scaled, very competitive manufacturing and pharmaceutical product businesses. And Britain tends to import a lot of products from Germany, including component parts and finished manufactured goods. And there's nothing wrong with that. We export to Germany as well, but actually Germany is a net exporting business and we're part of their overall current account surplus. Spain is interesting. Our deficit with Spain is rising. Lots of factors here. I suppose one of them is the rising number of British people who head over to Spain, not just once or twice a year, but for lengthy time periods on holiday. Indeed, by some estimates, there are over 2 million British people living in and around the Mediterranean, often for part of the year, taking many of their pounds with them. Another key factor, of course, has been that many of these European countries have been in the economic doldrums. Real output and real incomes and spending have been pretty stagnant or flat or falling. So they've had less real income to be able to spend on the products that we might be able to export to them. So if the European Union increases its growth rate, hopefully in the next few years, that might help to bring down our trade deficit if we successfully export to them. But the final point I would make is I think some of the increase in the deficit in the last 3 or 4 years has to be down to the strengthening of the pound against the euro. The euro has been a fairly weak currency. The pound has been going up against the euro. You get more euros for every pound. Well, one of the consequences, of course, is it makes it harder to export to European countries. British exports have become a little bit less competitive in recent times. And I think that could help to explain the fact that our exports to the European Union have been pretty flat, resulting in an increased trade deficit. But it's quite interesting to break down the data into some country information to see where the UK's relative advantage and disadvantage lies.